on to the next episode. Now, on the last video, I do believe that we left off when GA was more or less toppling at this point in time. As you can see, the markings are exactly the same. I did in fact take some time out over the Christmas period. It's currently today's date. Where's my calendar? 27th of December. So it's Friday and it is 6:23 p.m. So let's see what we've seen. Let's have a little look. All right. So when the market was plummeting, as you can see, I mapped on the London low. We came into the US session. US made one initial spike. It retested the London low right there, as you can see, more or less to the T, and market was pushed to the downside. Now, the market actually came into, if I put my crosshair just here where these spikes are, as you can see, as we went into the US session, 1.8950 was achieved once and then twice. Now, at this point in particular, I did go ahead and just put this marking on, but to make it more suited and well fitted, I can use an average of all of those spikes there, giving us a thinner region and a thinner zone. Now, with that being said, I think that at this point in time in the market, it was more or less fishing for orders, especially at that psychological level before this big move happened, and I'll explain that in a second. If you look over here at the macro chart, I've cleaned up some of the levels on here as we've actually moved out of that region on GA. But if you remember this one band on the 4-hour time frame, which I translated through all of this price action, and as you can see, before that huge explosion, in the midst of the micro scale, giving us the lower lows, lower highs, lower lows, lower highs, you can see where the market pushed and forced its way into 1.9, and it tapped into the band. The secondary 4-hour candle spiked through the band, and as you can see, this is the result on the micro scale. We have the US low 1, US low respected again, and then the market started to move back to the upside. So to translate what the data more or less suggests over here on GBP AUD is it ran back into the 4-hour band, and then what we've seen was this huge explosion in price. Now, obviously from the previous videos and me explaining numerous times over what these 4-hour areas can actually signify, we can clearly see that the market was pushed forcefully into that level just before the news. Now, the news was surrounding Brexit and some of the votes that were going on. But if you look at the technicals, how the cycle more or less was completed in the week and forcefully pushed into the band, pushed twice as the US session overlapped, and then the market made its way back above the previous London low. Right here, it made back above, spiked into it, and as you can see, the explosion then came about. What is important to realize here is for the start of the week, as you can see, the market was making its swings, respecting the highs, the lows, etc., etc. But on this very, very sudden and renowned price drop as the market tanked, you can imagine how many retail traders were more or less taking swing positions perhaps, and all of these lower highs here, 1, 2, 3, and then evidently the prominent high of the cycle, as you can see, one bar from the news absolutely wiped all of those swing points out and made that new high over there. So it was very, very well timed towards the end of the week when that news announcement did come out. But from the low of this bar, 9050, say, up to 9500, that was a good 450 pips, just over 450 pips. So what happened from then, as you can see, I've just tracked some of the price movement as to what we can more or less suggest going forward is this area. I found another block at the top there, this little liquidity point, which I've brought over to the right-hand side. And the market, as you can see on the micro scale, we made one high, an initial high, and this session time was going into Asia. Asia pushed the price back to the upside, but then we had the small bearish engulfing. It breached the high, but the market was then forcefully pushed back below. So this was evidently a clear stop hunt, and to entice more buyers to more or less say, okay, continuation's happening here off this massive fundamentally based candle. And it was a trap. So the trap, as you can see, market pulled back below, fluctuated throughout the rest of the Asian session, broke, pierced back to the downside, and this price, it was very, very difficult to read at this point in time. We made a London low right there, as you can see, 8 a.m. So if I just go ahead and mark this out, bear with me here. If I just mark this out, as you can see, London low, US opens, dip back into the London low, US respected what London did. I just highlighted this spike here because I was trying to get very, very critical at the time with the price and going through these markings. And then what happened? Market pushed back to the upside. If we zooming in, you can clearly see that because we recognize the high of that session there, which was the US session, after the news announcement, we've seen what Asia then did, fake out, brought the price back to the downside. Now this area here, I've simply marked that on with the horizontal ray tool. Why? Because that prominent low, which was the first point of call and the first bearish candle and the low it formed actually after this fundamental price run, I knew that would have been a very, very significant intraday area of support. So we broke that, we stayed below it for a little while here, and then we were back above. Weekend came, we forcefully pushed through into early hours of Monday. As you can see in the Asian session of Monday, Sunday night, Monday overlap, we forcefully pushed up again. And if I just put my crosshair at the peak of that high, you can see it's a higher point than here. So we have one drive, two, and then we have the third drive. But if you look closely and we monitor this, even just on the simple 15-minute time frame, market came back below and then started to flail around once more. This area right here, if you look at this US session coming in, that US high was more or less this region across there, quite a thin one, so to speak. 1, 2. Tested here as support, broken through. We didn't get the perfect retest in this session right here in this London session, but the market started to flail around a little bit. Now, if you look at this high and this high, how that PA translates over on the macro scale is that we rebounded from the MAs, we were swiftly back above water. So this area was respected quite well. And this micro scale high, fake high, you can see how the bearish engulfing brought that back down. So we had one push, secondary push, it did make a high, and again I've used the horizontal ray tool at the first spike there, we breached it, and then the bearish engulfing brought that down, telling us that momentum can now swiftly potentially reverse. And what did it do? For the rest of the week, the market sunk. So all of those gains, and remember, you have to think about people who would have had stops here perhaps and wanted to well, they had the hope of GBP pairs actually continuing the continuation move off the back end of this news here. Overall, the market just slowly but surely started to melt back to the downside and broke that area, eventually taking out this area, which is vital for stops. So 350 up, 450 up to what, 500, 600 down in 1 week. So you can see again that what I'm trying to portray on these videos is the head fuckery that the market makers will play against you. You think it's a sell, buy, boom. You think it's a buy, they'll trick you, trap people in, especially on the secondary wave here, as I've just explained on the micro scale, and then the market goes back against the emotion, the herd mentality, and so on and so forth. So you can see how we can gain clarity by even just marking on the correct session times and looking for the trap moves, always being on the ball on the micro scale, but again, appreciating what the macro scale does tell us. So anyway, market started then to swing to the downside. So here we have the high was formed. We had one low that was formed across here as well. So even if I just translate that there, that's a secondary low because the original low on that session was right there. The main low, sorry. Then we have obviously first low, secondary low going into the US session. US held that relatively well. Market, if I just remove that for a second, and we come through with this, so we can mark on this low right here, turn that black. You can see how more or less it was respected. 1, 2, market came through, broke that low, made a low here in the US. I've marked that on. By the way, the markings are really going to help you, especially with your own journaling and doing your annotations on the chart and actually tracking this and keeping all of this information in your head, so it could become second nature over you know, a long period of time, or short for some, depending on how fast you learn. US low, boom, we came back above, but throughout all of these swings, as you can see, the market is just swinging nicely. Here, when price breaks down on the micro, you have this. So we consolidate on that area of liquidity, and then boom, we actually break back below. This red candle takes out the wick there, which was kind of indecisive, and then the moving averages also give us a crossover, and the price breaks below and closes below the MA. Then price just starts to sink, but within that micro scale, and you can see the market just swinging again. You can just go through and you can see all of the highs and lows being respected. I'm not going to go through every single one. I'm just showing you an example of how you can mark out a high, you can mark out your analysis, to a very, very high degree of accuracy. Now over here we have a US high that formed right on the overlap, and it was respected once more there. Boom, back to the downside, swing, pull back, boom, pull back. Now this PA, I can't remember exactly what news event it was reacting to, but we had the Asia low that was formed at the US high over here. The Asia low, we came back into this area, so we've gone from range, gone back into making a low, we've gone back into the initial range. Then we've been driven substantially in the London session back to the Asia low, but look at this reaction. It's picked up orders or done whatever it needed to do just before the news came out, and in that one bar it spiked all the way back up to the T at the previous US high. So again, don't get fooled, don't get trapped. Always just take a step back and allow your ranges and areas, the trust and confidence in those areas, to actually assist you in your decision making. Market comes back to the downside, breach on the overlap of US. We actually start to tank to the downside into new fresh lows. And at this point in time, you can see where simply stepping back just on this 4 hour time frame really, and also keeping an eye on the day. Look at the day, by the way. The day, huge spike into the highs. We had a huge doji candle indecisive. Price action right there, and then boom, we have this huge engulfing candle that comes down, whips the momentum, and from that daily analysis there, from that candle alone, could tell you, okay, a reversal is likely to occur. And the market, again, look at this, it just dumped. I'll go into what I expect next from this in particular. I think, even today it's having a short pullback, but we do have this area, and then we also have our weekly area of support there. So for pound at the moment, I do believe that we're going to actually take out this region and sink into new lows over the next few weeks. So going back over to the 4 hourly, all we can see is the market pulling back to the moving averages, dumping, back to the moving averages, dumping. The spike low there was quite important. I did think at one point, I was watching the PA and thinking and maybe suggesting that we could have a rebound from there, but no, we broke through, retested. Not only did we retest the ray, but we also retested the moving averages, and price continued to sink. Only now have we really had an area of consolidation, which I'll get to afterwards, the most recent market movement. So here into the US session, we had the preliminary high, and then we had a secondary high here, which again I've used because of the forcefulness of the price action, just showing us bearish Momo. And over here we come into the Asian session, bringing that across there, Asia low, and again you can see where for 1 to more or less 3 sessions we started to consolidate and give us some forceful push to the upside, but then we were greeted with further bearish price action. And I haven't got any other areas and ranges on my thingy at the moment, my session timings on, but I'm going to now just quickly update some of the areas going forward. I'm sure you're getting the hang of this by now, and you can go into the charts yourself and just have a little bit of a practice. My job here is to highlight what I see in the market, and then you can go away, do your chart time, and merge your personality traits around that, and hopefully enhance what I've showed you. So let's just start with 8 a.m. over here. Go to 1400, and then we go to, okay, so there's a bit of we had a day or so where the market closed. Okay, so I'm just going to leave that one out. We have London there, then we have US session right there. Then we go into normal timings, 00 right here. Then 8 a.m. again. So let's just track out what GBP AUD has been doing for the last few days over Christmas, and see where potentially it's going to be headed next. So today, 1400, 1400 right there. And then tonight, and then we have the closure because it's Friday. So at these lows, let's take a look. At these lows, we had a forceful push. Number one on the macro scale, look where we're headed. We headed straight into 1.8650. Okay, huge bearish momentum pushing through that. And that was right there. So this sell-off after sell-off, as you can see, after this most recent sell-off, where we actually stayed below that region. And that there I can tell is also a US low. Once it broke that US low, we spiked it here, we broke straight through it. Bearish momentum just continued to fall and pushed a good few, 200 pips lower, I believe. Anyway, 1, 2 spike, 3 spike, and then we had this push yesterday as well. So let's just break that down on the micro scale to see how we are looking right now. Now, I'm getting my ranges. I'm just going to start over here. So going into London, we had this London low there. Going slightly above and beyond, we have the London high, which was formed just here. Then we have a US high, which was formed there, which again could equate to helping us right here from some of these sharp sell-offs that we're seeing on GBP AUD. And from there onward, we also have a few smaller ones. So this is a London low right there, bring that across, so on and so forth. Now, the aim is not to over-congest your chart, and some of the previous week areas can always stay on. But over time, when you build your intuitive factors and so on and so forth, you know which ones to more or less get rid of, and you know when the cycle is about to start again. Sometimes in the week, the cycle can start, Monday, Tuesday. Sometimes the market may need to just recalibrate for Monday and Tuesday and then start to show you the areas. It needs to print the new areas, and then if you're on point and staying focused, you can see those areas, and then you can use them and utilize the rebound points and reversal points to an accurate degree for, let's say, Wednesday, Thursday, Friday. So what GBP AUD has done, if I go into these lows over here as well, so what we can do is go horizontal ray right at the low. Great, nice area of base support. And we can use the trend line tool. There's a 4-hour region, which is it's reactive to again. So we have the break, we have 1 test, 2 tests right there. Moving averages are closing in after quite some time. So GA could be on the way to maybe back up to 850. But going back into this chart to dissect what has actually happened here, especially overnight yesterday, is we came into the cycle, we made that initial low. We have a pump high, which blasted through this area, okay? Come back, made a low right there, back into the high, back into the low, back into the high again. And this area, we have spike, spike, spike. You can see that 1.8750 is right more or less on here with the crosshair. But then as the market started to dribble back down and stay below this area, the market then tanked again, breaking the previous area, which was respected that same session. Broke through, retest 1, retest 2, coming into Asia, and then Asia forcefully pushed the price back down into what? The previous London low. Spike straight through. Now, this would have been a big trap for those who are thinking, okay, especially after this bearish engulfing candle here, we're in for a continuation. Big shock, because in Asia, the session of Asia still, we spike into the low, but then swiftly reverse back into the highs. Number one, we respect this zone. The pullback on the session overlap into London respects the previous high, and then the market goes into taking out new highs, push 1, push 2, push 3 today. But on these pullbacks, this one wasn't, it came back into the moving average. It remained above this area, but again, this is very, very hard and tricky price action to keep track of, because of how it is looking and how the volume and the liquidity is actually so thin in the market, because it was Boxing Day yesterday and we're coming to the end of the week now, January, looking for a great start to January. I'm sure you guys are as well, into 2020 in itself. But from the highs, boom, price came in from 8815 all the way down to 8740, but look at where it stopped, halted, right into that previous area right there. Spike, 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 comes back above, test 1, test 2, and now we're looking for price to maybe continue back to the upside. So it's going to be quite interesting to see. One more fact I will point out is that this was the high of London today, going into the US. US breached the area and then came back below. So again, head above water, head back below water, caused the sales there, even back into that region. If you see the market struggling there from taking a short trade from, and here would be the most ideal and suited place. once the market has showed you prices come back below that area. If you see this struggle, a few spikes, the same techniques and the same warnings, so to say, to get into a trade, we can also use to get out of a trade. So right now, we do have this area right here in which market could come back into, retest that, and then dump. Who knows? It's quite a tricky one, given what I've just mentioned, the thin liquidity in the markets and all of that good stuff. So even here as well, we have the 4-hour confluence on those 2 candle bodies, which the market has 1, 2 came in, 2 4-hour spikes, which could also be an added confluence and be a building block to this market now moving back to the upside. So hope that video was helpful. I'm going to move on to gold next and give a nice wrap up on gold. I think there's going to be more videos in the new year. So thank you.